afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, November 14th. We are looking at Window Traders market profile of the ESN, the NQ. This was a boxing match. They would have stopped it right after the first round. I'll tell you what, this is very, very, very impressive. NQ getting close to their yearly high. Triple Qs missed it by a little bit, I think. We're still a bit of ways from it, but I mean, just a fantastic day. We close up 2%, Qs 2.4. Righty closes up 5.5%. Remember what I said yesterday? If this market's going to go make highs for the year, righty has to participate. Somebody was listening. Good day today, all from the long side, and I didn't do anything after J period. I didn't. There's two trades I could have taken. We'll go over those that in the afternoon. We attempted to go trend up. That failed 3 times. We had single prints in ES. NQ had them once. Righty does go out with a double distribution day. Only one set of singles. But look at this. They're the only ones that probed, and look at them trading higher already in the after hours. So they're really moving. NQ goes out with a 9-wide POC and an afternoon pullback. And J, same with us, 9-wide POC and J-Lo, our favorite little musician that keeps popping up there. 9 is our afternoon pullback. We both failed the trend days up. However, we have gaps of a really big magnitude, almost $5 in ES. We have 3 large gaps below us in the S&P, and we have 4 overall. Don't forget, we have that 2-tick gap from Fed Day. 2 ticks. So this market is steamrolling right now. I think we are getting much, much better odds to make a new high in the year, and right now odds are starting to increase a little bit to maybe make an all-time high. But for now, I would set my sights on a new yearly high, possibly. As far as my trading, look, I longed A in both ES and NQ at different times. I longed A, B, C, D, E, and F. Now, A, B, C, D was because the market was going up. We got the overnight high. B period, I did it to get A's high. C period, I did it because we had singles. D period, I did it because we had singles. Those are my longs. E period, I took the long against the 144 the first time. That was actually my biggest trade. It was a 4 lot and got paid for it. And then I was looking for the afternoon pullback. Now, I bought F period in ES, in NQ, thinking it was the afternoon pullback. And I bought J period in NQ when I thought it was. I didn't want to get involved with both of them at the same time today, so I did it with NQ. They both would have paid. ES actually acted better, never took out B-low to get into its buy tail. NQ did get into its buy tail, not only in J, but prior to that in E and F. So, but I ended up doing an NQ. Now, the trades I feel I missed before I took J's long was G period. Should have taken that long against NQ's F low. Same with ES. Could have done either one of them because they paid nicely to the upside. The other trade I could have taken, I told the room, when we take back a trend day like that, it takes the life out of the momentum. I said, I'm not saying we can't get a new high on the day. The odds were in favor of it because of how strong this market was. I said, I didn't think we'd get much for it. Not only didn't we get much for it, look at the way we pulled back. I mean, we pulled from 24 and a quarter to 06 and a quarter. Pulled back 18 handles. So I could have taken a short there to not hold trend when we started in M period with a small set of singles. But again, seeing the market well is the key for that's all I care about for my room, and nobody has to worry about my trading. I take care of my own trading. I did well, so I'm not upset that I didn't take that short up there. It would have been my only short of the day. I was not looking to short this market at all today, except at that point for those reasons I just gave you. Now, as far as our destinations, Our upside in SPY is 450.06, and then the next one is 450.108, which is a weekly high. Downside, 9-wide POC, 448.56. Afternoon pullback, J-low, 447.70. And then today's low of 446.09, and then filling the gap at 441.33. A $4.76 point gap. Inside of that gap is a 10-wide POC from September 20th at 443.59, which was an upside destination and now is firmly a downside destination. In ES, downside 0875, 9 wide, 4,500.25 pullback low, and today's low of 83.75, and then filling the gap at 36.75 from today. We have a the 10 wide POC from yesterday is now a downside at 27.75, and we had a 22 wide overnight POC at 27.25. So look at this. So if and when this gap ever fills, and at some point it will, these will be targets, right? This is where we exploded out of today. So those are your destinations. Now, chart-wise, so the monthly, so we had a good question asked today. I always say markets, right? Markets don't go bull bear, they don't go bear bull. Well, the market was bear in ES, right? Until we took it out last month's high. So now it's balanced. Now, if you look at triple Qs, they did the same thing. However, triple Qs is very close to taking out the yearly high of 387.98. They missed it by about $1.70. So somebody asked me, what happens if we make a new high on the year in November? Would you call the monthly up? And my answer was, I don't know yet, because initially I said no, because November is just putting us into balance. So if we take out the high in both ES and NQ of the yearly high this month, but only take it out by $3-4, I would still call it balance, and then I want December to prove itself by taking out wherever November's high is. Does that make sense? Now with 2 weeks to go, if we really ripped high, I mean, I'm talking about if we got up to 400 maybe, $12 above the yearly high, then I would probably call triple Qs up on the monthly. Okay, same with us. If we took out 459.44, and we're still $10, $11 below it, but if we blew through that by $10, I would call it up, because then you're going to be close to the all-time high. So for now, it's just forming its balance. Remember, it's subjective. Balance rules, it's an art, it's not a science. You wouldn't be right or wrong if you say balance or up if that was to happen. So we're balanced on the monthly. The weekly, firmly up. Firmly up. Okay, we're up 10% from this weekly low. 409 to 450. $41. 10% move. Are we stretched? Remember last week or 2 weeks ago, people were saying, well, the market stretched here that week when we ripped up that Friday. I said, we're still in balance, for goodness sakes. How can you say it's stretched? Then last week we came out of balance. Oh, we're stretched here. I'm like, no, you're not. We still haven't gotten a significant move above the balance. Now we got a very nice move. Am I going to call it stretched though? No. I have no idea if the market's stretched. Right? Would it be healthy to pull back a bit? Sure. But this is where people look at price and are absolutely clueless on the concept of trading. Because they're not trading, they're gamblers. They just look at price and think it went too high. And that's why looking at price and trading price sometimes is a bad idea. Trade what the market's telling you on the charts and certainly on the profile. So the monthly is balanced, the weekly is up, and the daily is up. So now people are going to say, well, look at this, we're stretched. Hold on a minute. Hold on a minute. We had two huge gaps here. People were screaming we were stretched. Well, guess what? We came into balance, didn't we? We came into a nice 5-day balance. And then 3 days ago, what happened? We came out of that balance, right? Then we didn't get much yesterday, and look at today. I said treat it as an inside day. NQ was an inside day yesterday, right? I totally forgot about mentioning that today. Yeah, look at that. Come out of an inside day, you go with it and monitor for continuation or lack of. Boy, oh boy, was that continuation. So the market went bull, balance, bull. You could have even called yesterday a little bit of balance, back to bull. So again, here's your question. Is the market really stretched out? It could be, but people don't understand this concept at all. And thank God they don't, because that's our competition. Right? The people shorting it are the ones giving me an opportunity to buy it on days like today. So anyway, I hope that helps a bit. The volume today right now is at 94 million. Remember, yesterday's was the fourth lightest of the year. So when we made that downward move here, we put in 3 of our top 10 volumes of the year in October to the downside. Now to the upside, we haven't put 1 in the top 10 in the highest volume, and we actually put 1 yesterday in our top 10 lowest. I would like to, again, I'm not sure, and again, we can make new highs from now to the end of the year with short-term players. I'm not sure if the big boys are really participating, we wouldn't be doing 94 million, we'd be doing 144 million, things of that nature. So if we do go higher or get a pullback, but not much of one, if they feel they're underallocated or underweight for the remainder of the year, that could fuel this even more. Anyway, look, this is what you get in my trading room. So for $30 a month, or like I said, I've offered this now, $225 for the year, payable through Venmo, for an annual membership. I'm holding that to the end of the year. Right? You can email me at paul@camelbacktrading.org for further information. Hope you had a good day trading. Rest up, have a good night, and we'll speak prior to the opening tomorrow.